Microstrategy out with earnings yesterday. The software company known for its digital currency adoption revealing it has acquired more than 13,000 bitcoins for $529 million in the second quarter, adding to quite a number already on the balance sheet. Joining us now is Michael Saylor, Microstrategy's chairman and CEO. Michael, great to have you back on the show. Thanks for joining us.
Thanks for having me. Happy to be here.
So let's talk a little bit about the earnings, and then we'll dive a little deeper into Bitcoin specifically. But the fact that you did report a 13% increase in overall revenue, you and I have talked about this before, that core business intelligence piece of the company, coupled with Bitcoin on the balance sheet, the symbiotic relationship. Speak to that. How is that helping to fuel this recovery that's emerging within the core business?
You know, Q2 was awesome. It was our best second quarter in 6 years. We beat on the top line. We beat on the bottom line. We generated $1.72 in non-GAAP EPS versus analyst estimates of 98 cents. And we did that without any acquisition gimmicks. It was all organic growth. And I think you can attribute that to the laser-like focus of the company on business intelligence. Our big competitors, they're full-stack vendors, and they're doing their best to compete with AWS and Azure, and I think they're getting distracted by the need to build these big multi-application cloud platforms. And we just do one thing, which is we sell enterprise business intelligence, and that's what benefited us in the second quarter.
And certainly that transition to the cloud has been what has been in focus for the handful of analysts that do cover your stock. How does cryptocurrency, how does Bitcoin factor into that?
You know, Bitcoin has done wonders for our brand. It's elevated our brand by a factor of 100. Obviously, it's made our shareholders billions of dollars over the past 12 months. Look, Bitcoin is digital real estate. People are starting to realize that it's better than real estate. It's scarcer. It's not taxed the same way that real estate's taxed. You can take it to any state and any country. And they used to say you can't take it with you. You literally can take it with you to the grave if you want. And so it's enormously appealing to people that are looking for economic security right now. And that's an incredibly powerful trend. The company's benefiting from that groundswell of support for Bitcoin.
Yeah, I want to get into that a bit more, but first, the fact that the company has racked up $2.2 billion in debt. You did mention post-earnings yesterday that you will continue to buy more Bitcoin. How much, and how will you fund that?
We're buying Bitcoin with our cash flows, and we've got a very profitable enterprise software business. So as we generate more cash, we buy Bitcoin. We've also bought Bitcoin through equity issuance as employees generate stock option revenues. We bought Bitcoin with convertible debt, with senior secured debt, and we have $1 billion shelf registration. And to the extent that we see any of those opportunities as accretive to our shareholders, then we'll buy more Bitcoin. Obviously, we look at the market and we judge it from time to time based upon market conditions.
Yeah, I mean, so many folks I speak to focused on cryptocurrencies say that you're a Bitcoin whale. So I'm curious just how much is enough, and also given the fact that it is accounted for as an intangible asset, which means that you realize impairment charges, but you don't realize those gains unless you sell Bitcoin. Does that need to change?
Well, you know, I think that GAAP accounting doesn't always keep pace with the rate of innovation in the capital markets. We have a very sophisticated set of shareholders, so they know they can multiply 105,000 by the price of the Bitcoin. They know we've got $4 billion worth of Bitcoin right now. Now, the current treatment is indefinite and intangible, so that used to be odd but irrelevant, because a year ago, no publicly traded companies had any Bitcoin. As you look out over the next year, you've got dozens of companies in this economy. You've got billions and billions of dollars of assets. That accounting has become ill-suited and a bit opaque. So, I do think an update to the GAAP accounting treatment for digital assets would be a benefit to big tech. It'll be a benefit to investors, institutional investors in the U.S. markets, and it'd be good for the country. So I'm optimistic that people will look at that.
Michael, it's David Faber. I asked you a version of this question the last time we spoke, but, it's interesting to me. I mean, I can understand to a certain extent given your belief in Bitcoin, taking cash flows and buying it. But why put debt on the balance sheet to do it as well? Why lever up the company and take the corresponding risk, at least, of that increased debt load to buy this asset as well, Michael?
Well, you know, we've got $2.2 billion of debt, and we pay about 1.5% interest on that debt, and we have a very long time horizon. So our point of view is being a leveraged Bitcoin long company is a good thing for our shareholders. If you could borrow billions of dollars at 1% interest and invest it in the next big tech digital network that you thought was going to be the dominant Amazon or Google or Facebook of money, why wouldn't you? I mean, if I could borrow $1 billion and buy Facebook a decade ago for 1% interest, I think I would have done quite well.
Yeah, so you see Bitcoin as sort of Facebook 10 years ago, or at least the same investment opportunity?
Bitcoin is an open monetary network, and everybody's looking for this open way to store value and move value at the speed of light using a computer chip and a mobile phone. So you had Google that created digital books. You had Facebook that created digital communications. Apple gave us digital music, and Amazon gave us digital retail. Bitcoin's digital property on a big tech open monetary network. You know, that, I mean, the big news this week is 114 million people now own Bitcoin. That makes it the most broadly held financial asset in the history of the world, and they're adding 2 million people a week. So, you know, that's the fastest growing financial asset, and it's open to anybody 24/7, 365 in any country on earth. So our view is it's only a matter of time before billions and billions of people have mobile phones plugged into Bitcoin. And we just want to be there first, because there's never going to be more than 21 million of these things.
Right. You know, I thought it was interesting you said a few moments ago that your involvement with Bitcoin has elevated your brand. I'm just curious. So when you have your salespeople out there, I mean, they go to a potential client and they know them as the Bitcoin people, and that starts a conversation that leads to business that might not otherwise have been there previously?
Look, Bitcoin is a moral imperative to everybody in the world with a collapsing currency, and that makes it a very exciting thing. It's an economic imperative to anybody that wants to escape inflation. That makes it interesting. Bitcoin's the most exciting technology of the decade. Is getting built into PayPal, into Square. It's only a matter of time before it gets built into every other website or mobile phone. So yeah, every CEO, every CFO wants to talk about it, all the CXOs, the CIOs, anybody in the software industry. It's a door opener, and it's very important that people know who you are. That starts the conversation. It's been great for our enterprise software business, and it's great for employee morale as well.
Michael, the skeptics, the critics in recent weeks have been pointing to Bitcoin and the fact that we did see such a dramatic drop in price from those highs earlier this year to say that it's not like digital gold. It's not like, I know you just used the real estate metaphor here earlier in the conversation, that it's not a hedge against inflation. Senator Elizabeth Warren, who's calling for more regulation of cryptocurrencies in general, had this to say and sort of joined that chorus of critics earlier on CNBC this week. I want you to take a listen.
People can make their own investment decisions, but to do that somehow assumes two things. One is that what's happening with Bitcoin or any other cryptocurrency is somehow going to be divorced from what's happening elsewhere in the economy. And secondly, that the crypto coins are not going to have their own inflationary pressures. They may come from a different source than what happens with dollars. But look at what's happened in the high volatility in the price of these things. The idea that somehow they're a protection or a hedge, I don't think that's going to be borne out over time.
Your reaction to that?
Well, I think that Bitcoin is like electricity or like steel or like fire. It's a very big idea. It's digital property on an open protocol monetary network. It would take 1,000 hours to really understand it well. I think that right now every politician in the world is being asked to have an opinion on it. And I doubt that every politician has 1,000 hours to think about it or study it. So you have to have a long time frame, like we look out a decade. And look, if you'd asked Elizabeth Warren her opinion of Google, Facebook, Amazon, and Apple in the year 2010, I wonder what she would have said. I think everybody's entitled to their opinion. I think that this is literally crypto steel for the 21st century, and it takes time to fully grasp the implications of something so profound.
Does crypto steel need more regulation?
I think that there's going to be property tax and property regulation on digital property. People expect you to pay your taxes on your property. I think that the digital currencies like Tether will be regulated as currencies. I think that decentralized applications that are insurance exchange or derivative exchanges will be regulated as derivatives exchanges. And I think that's a good thing. I think in general, as crypto community moves into the regulatory environment and they're embraced, it's going to give institutional investors comfort that this is going to be around, and they will understand how, with clarity, they can invest in it. 100x as much money is sitting outside of the Bitcoin world as inside the Bitcoin world. And as the regulatory clarity comes, I think that lots of people are going to move into the Bitcoin ecosystem with comfort.
Michael, I always appreciate getting your insights. Thank you for joining us. Michael Saylor.